Hello, everyone, and welcome to this introductory demo on how to start trading options using Alpaca's trading API. I'm Tony Lee, president of Alpaca Securities and Product Strategy. Now, before we begin, I'd like to say a huge thank you for the incredible response we've received from our community since announcing the launch of our options trading API. We are excited to share how you can use our paper trading environment to start testing your options investment strategies. We have also included links to helpful resources like documentation and SDKs to jumpstart your paper trading journey in this video's description. Now, let's get coding.
Okay, so I will be using VS Code for this demo. And now first thing I'll need to do is make sure that I have Alpaca-py, which is Alpaca's Python SDK, installed. And I will be using a pip to install that. Now I already have installed, so I'll just gonna use upgrade tag to ensure that I have the latest version. All right, good to go there. Next thing I'm gonna do is set up the streaming endpoint so that I can monitor all the trading activity that we'll be conducting during this demo. So I have my Alpaca key set up here. I have it hidden, and then I will basically import the packages that I need. Okay, let's create the trading stream endpoint here. Okay, so what I'll need to do is set up my secret keys there. Now I'm gonna basically define the handler so that we can basically print to screen all of the trading activity that's happening, and then subscribe the handler, and then run the endpoint so that if we just run that here, okay, so that is running, and as we conduct trades, you will see activity being printed to the terminal. Okay, so now let's get started with our options trading API. So first thing we'll need to do is basically set up all of our parameters. So I already have my API keys hidden above, right? So I'll be using our paper trading environment. So he's setting our paper parameter to true. Now let's import all of the package that we're going to need to do our demo. Going to have some datetime parameters, packages, sorry, import. Okay, going to need we're going to be querying some market data here. Yeah. So these are all the packages we'll be using during this demo. All of the definitions of these packages are available on our website. Okay, that right. Sorry. Okay, let's insert a new cell here. Okay, next, let's set up our clients. So the first client here is it's our trading client. This is the client that we will use to set our account configurations and actually conduct some trades. Stock data client is the endpoint we will be using to actually get underlying stock data, and then options here for options. Okay, and that. Okay. So next, let's get some account details. So in the trade client, we can query get account, and then from there, it returns a whole bunch of values, but the ones that we will be looking at for the purpose of this demo is what options trading level the account is approved for, what options trading level the account is currently set at, and also what is the current options buying power, right? All right, so we are approved for level 2, we are currently trading level 2, and right now our options buying power is approximately 94,000. So technically we could buy around $94,000 worth of option premium currently. Okay, so one feature with the API is you're able to set your options trading level lower if you want to for any risk management purposes. So how you can configure that is using one of the parameters in the account configuration called max options trading level. So how you can query what your setting is currently is you can use the trade client get account configurations method, and from there you can print. So right now our max option selection level is 2, right? Let's say if I want to set it to 1, then I can use the set account configurations method, and then let's query what it is after. So, right? So as you can see there, it was previously 2 and now it is at 1. Okay. If I want to set it to 2 again, I can just change that. And look, all right, now we're back to 2. Right, perfect. Okay, so now we want to get a list of assets that have options available. So we can use the get asset request method, get asset request, to get any assets that have options enabled, and then use the get all assets endpoint to retrieve the list. All right, so what do we have? So the number of underlying options available are just around 5,500. Okay, so for the purpose of this demo, I'm gonna look at Tesla, right? So I'm gonna set my underlying symbol to Tesla, and I'm gonna check to see how many options are available. Right? So right here we see Tesla has options, true, right? So now we know Tesla has options available to trade, as I'm sure everyone on this call already knows. All right, so now what we're gonna do is we're gonna implement a simple call overwrite. So I will show you first, if we look at what is currently in the account, okay, we can do that first by actually just querying the positions endpoint. So let's just print to see what's in this. All right, so here we see we have 3 positions in this account. So we have long some Apple calls expiring in April, and long some spider calls that are expiring today, and long 100 shares of Tesla, right? One thing I would like you to note here is if you scroll to the end here, there's this one parameter quantity available, and that's 100. And that's how many Tesla shares you have available to sell. And so it's important to note this, as we will see later when we actually put on a call overwrite on Tesla, you should see this quantity available decrease. Okay. All right, so we are going to put on an overwrite on Tesla, or some people call it a covered call. So the first thing we need to do is select the call option we want to sell. So what I'm going to do is I'm going to create some filters and query all the call options based on the filter parameters that we set. So let's look at any call options that expire between 14 to 90 days. So, okay, first we will give today's date. Let's say min expiration is 14 days from now. Max expiration is 90 days from now. And then let's say we have a short-term target price of Tesla at 2% higher than the current market. So we're going to look to sell a call option that's at least 2% out of the money currently. So what we need to check first is we need to get the latest price of Tesla, right? So we will use the latest stock trade endpoint to get that. So first we'll make the request, set the underlying symbol to be Tesla that we've set in the variable we set previously, and we will use the get stock latest trade endpoint, and which will return the latest trade, and from there we will get the latest trade price. So let's just print that so we know what it is, and then I'm going to set the min strike for the filter to be 2% higher than that, and then let's just print all of our filter values here just so that we can see what they are. All right, so last trade's 172.47. We have a min expiration date of April 8th, max expiration date of June 23rd, and our min strike that we will be looking at is 175.92. Okay, so now we will iterate through the get option contract endpoint to be able to get all of the call options that meet our filter requirements. So I'm just going to copy and paste it. So this will return our first page, okay, based on the filters that we had set. So we want to look at only contracts that have an asset status of active, expiration date greater than our min expiration, an expiration date less than our max expiration. We want to search for root symbols that are equal to our underlying symbol, which is Tesla. This is one way to potentially filter out any option symbols options on Tesla that have gone through corporate actions and have become potentially non-standard. We only want to look at call options, and then anything with strike price greater than our min strike. Okay, and then we set our page token to none to query the first page. Okay, so we will use the get option contract endpoint to get our results, and then from there we will start a list based on the chain's option contracts as returned. Okay, and then what we'll need to do is, since there's a potential limit on how much is returned on the first page, we will iterate through multiple. If the list is long enough, there may be multiple pages, so we will iterate through the pages to get to the complete list of option contracts that we are searching for. Okay, so we're using the results from the previous query and using the next page token to get the next one. Okay? And then we will get the results and then extend our current list of option contracts from the results of the next page. And once we've iterated through that, we can see how many total option contracts have met our filter. Right, so let's run that. Right, so we've retrieved 200 on the dot options. Next, what we will do is we will pick a strike to sell a call option on. And I will be using a very simple method of just calculating the annualized yield based on the current bid price of the option. Now, this is not a recommendation. This is just one methodology that could be used. So I will start, let's start here. Let's iterate through and keep track of what the highest yield is. And then let's just start with our first option in the chain as the first option here. And then what we will do is iterate through our option chain list. Okay, get some of the details here. So there's our symbol, our strike, our expiration, and then we will use the option latest quote request to get the current option quote, indicative option quote, and then use the get option latest quote endpoint to get to the current bid ask. And from there, from the results, we can get the bid and the ask. Okay, so now I'm just gonna do a couple of sanity checks here, just so that nothing goes wrong. You know, just want to make sure the bid is greater than 0, and then the bid is also less than the ask, which should be the case in most, but just to have a double check there. Next, we calculate for this particular option how many days until the expiration. So days to expiration is the expiration date minus today and number of days. And then to calculate the yield, what we do is we take the current bid price, this is what the price that we are indicatively able to sell it at, divided by that last price, and divided by the days to expiration, multiply by 365. And if this yield that we calculate is greater than the highest yield that we have so far, then we will use this option. Okay? So this iterates through the list and we'll pick the option with the highest annualized yield. Right. So based on that, once we go through the list, let's actually print. All right, let's go. So let's iterate through the list. Now, as you can see, it's iterating through 200 options and getting the bid price. There's definitely ways to optimize this code, but this is just the simplest way to show how we can use the API. So based on our criteria, the option that it had selected is the Tesla April 19th expiry, 177 half calls, right? So the bid price at the time was approximately $7.89. And if you annualize that, it's around 67%. Right, so the next thing we'll do is actually sell that call option. So as you remember, we have along 100 shares of Tesla. So we are able to sell one option contract, call option contract on Tesla. So we will first set up the limit order request because we're going to sell it at a limit price at our indicative bid, right? So first the symbol that we're using is from the highest yield option. The limit price is the bid that we had calculated at the time. We are selling at a limit price, time and fourth day. Okay, so let us use our trade client to submit that order, right? And then we'll just display the results. Okay. All right, so this is what was submitted. So this was successfully submitted. And as you can see here is our streaming endpoint that popped up on the right here, and it shows the new order and then the execution of that order. So we actually executed it. So we had a limit price 79 and we ended up executing it. Oh, this is not actually filled yet. So let's see. So this must be a working order. So let's take a look. All right, so let's get the order status. So we will get the order status of all orders. So we'll use the get orders request to get that. So all order status, and then we will be using the symbol of our options of our option that we had selected to sell. And we will use the get orders endpoint to query. And let's display them, right? So. Right. Okay, so what I'm going to do here, just for the sake of time, is cancel the limit order we have working here. and just place it a new market order. So first, let's cancel the order. As you can see here, the order got canceled. And then let's create a new order. Okay, so a market order request using the same option symbol. This time we are sending it as order type market. So use the submit order endpoint and then submit it. All right, so you can see here it was submitted, and we can see here it was filled at a price of $7.65. Okay. So now if we scroll up and go to our positions endpoint, let's go take a quick look at our positions again. So right here. All right, so you see here now we have this short call option position on Tesla, right? And you'll see that our Tesla position remains the same, but now the amount available to sell is 0 because we are using 100 shares of our long Tesla position to secure against the covered call. Okay. So the next thing I want to go through is how to actually liquidate an option position that you have existing. So let's just go through. So right now we have 4 positions on. The first one is long Apple call option. The second one is spider call option expiring today. So let's use the close position endpoint to actually liquidate this long Apple position. So that is from our positions list. It is position 0. So let's just go through there. Okay. So the symbol that I want to close is the position 0. And we will use the trade client close position endpoint to close that position, right? So symbol to close is our close position symbol. So you see that was submitted, and then you will see here that we had sold 1 contract of this Apple call option for a price of $1.57. And then if we scroll up again, and we can check our positions here. All right, so you see the Apple position fell off, and now we are just left these 3 positions. Okay, so now this spider option expires today, and just for the sake of the demo, we will show you how to elect an early exercise or just an exercise on this spider option. So this is position 0 here again. So let's just scroll down. So there is a exercise option position endpoint. So let's just get the symbol of the position we want to exercise. So that's position 0 in our list. And we will use the exercise option position endpoint to exercise that position. All right, so that returned with no errors. Okay, so now what we should see in our positions is that we are no longer long that call option, but since we exercise the call option, we are now long the underlying shares, and it was 1 contract, so now we are long 100 shares. So this brings us to the conclusion of our demo. As a recap, you can use your Alpaca paper trading account to not only test Alpaca's trading API, but also to test your algorithmic investment strategies in a simulated environment before deploying to a production live trading. I hope you found this demo helpful. Your thoughts and feedback are invaluable to us, so please share them in the comments below. If you haven't already, sign up now to start paper trading options. And don't forget to keep an eye out for the official launch of our commission-free options for trading API. And stay tuned for updates. Thank you very much.